Hey, how you going? Looking at the US 100 today. I'm going to mark it up from the monthly, weekly, and daily. I'm using currency.com or Tradingview. The reason being is, as you'll see here, the data doesn't go all the way back. However, that's not a concern for me. It's more looking at the chart structure right here, as I can see what it's telling me in the past. Don't forget to give me a quick like if you like to subscribe onto my new YouTube channel. I've only uploaded a couple of videos so far. Brand new to it, so give me a bit of time to get things sorted out. Not much of a video maker. So let's mark this up. And also, please look at the description box, as I'm not a financial advisor, so I follow my own set of rules, and you should follow your own as well. Use this as a reference guide and look at everything I'm saying here with a pinch of salt, as the market moves fast, and you've got to take the opportunities when it's presented to you. So yeah, let's mark it up, hey. So as in reference with my theory and strategy is that blue lines are monthly. So as you can see, there's a super steep curve here, which has taken us from the COVID lows, which align previous structure. Which mark that here quick for the previous structure. Now that's an original level, right? And that's been tested already for the first time. However, now this is our new original level. So OL. And price will come back to this deviation point at some point from an arrival zone. A major untested fresh zone structure here, whereby price will tail off. There's another monthly marking right here. Now, a lot of people can choose the entire wick or a half wick as opposed to however you've learned. You can use the magnet tool here, and that will help assist with where you like to place it on the candle body. So as you can see, it takes you right to the top. So I'm going to take it here halfway because that will align better. And I'm also going to make sure this is available on the monthly and weekly, and likewise here for the monthly and weekly. So what's happened here, right, is that this is a fresh level, and also considered an original level too in some respects. This is the original level, but this is a fresh original level in terms of it is a combination of a weekly and a monthly. So therefore, the fresh tap will be considered a strong demand zone, and it is. So hence the reaction taking place on the monthly and the weekly specifically. So as you can see, looking at the curve is that there's a strong bullish pullback, again, continuation process happening. You can identify as well with the US 30 and the S&P 500 is that the exact format pattern that has occurred the entire way. I don't even need to show you this, just check it out yourself, and you will see that there's been 4 or 5 consecutive months here where price has gone exponential and a pullback has occurred. Its continuation points keep occurring, and these pivot points, especially this one here, which I'm going to highlight in white, this one is predominantly their fake bearish trap to create a top, but price just continued. And the reason why is that when you align it to your fibos from the low to here, look at this, it extends to exactly where we want it to go. So a lot of people would call this the zero, or this the zero. This is your zero, and this is your extension points. Perfect alignment. Price will never reach perfectly. It can, but the point of the matter is that this is your placement zone of your supply. Now, it's just a rough estimated guide. Nothing is perfect. The market does what it wants. So you trade the probabilities in your favor. Don't go looking for tops. It's not going to happen. So just be aware of that. Excuse me. So from here, you can now see that there is a strong curve to the downside happening. Now you can take it from this point or this point here. I will take it from this point here and smooth it off a little bit. So it's getting even steeper, but what we can expect is that this zone here, which will align nicely on a weekly, and we'll make it deep purple. We'll make this visible on the weekly and monthly too. So this, in my eyes, may not align on the other weekly. We go view it next, but this looks like a PCP. And what a PCP is that it is where price goes up, continues to rally, fresh tap of their active zone, and sells off, and retests this line here, which means what? It means more likely that price is going to delve back into the structure, and as the structure gets weaker, opens up the opportunity here for a downside move. Now, a lot of people will call this and say, there's no way it's going back to this level. You're not right, I'm not right. If it trades here and breaks and retests and then falls further, then the original level is definitely imminent, that's for sure. However, being a strong zone here, price can obviously deviate and rocket back up to test this PCP. But the fresh supply originally here is the indicator that the bears are in control. So keep that in mind. This is technical aspect only. Things can change due to the fundamental environment. So we'll see what happens when we get there, right? So on the weekly then, what can we say? The markings are still there as expected, which is fine. And the PCP does align quite nicely. I'll draw another one just to smooth it out. But essentially what's happened here is that price has netted off very nicely in this zone. And a netting of an imbalance is where the top meets the bottom and nets out to zero. Exact same as you would in a bank account when you owe someone money. So just think of it like that. It's very simplistic, but it's also very true. The market's pretty clear from my experience of how it always doesn't assimilate, but think of it as a fractal where the patterns will reproduce, but not in the same exact distinct way. There will always be areas which look very familiar, but every pattern is different, right? So you got to keep that in mind. So this is your imbalance on the weekly. And the reason why I've chosen this candle is the wick is very important here as it's a double top formation. The line here also pretty much nets out, right? So if I just pull this across and get rid of it, and then pull that one up, you can see nice touching there, which is perfect, which is exactly what we want, right? So that is that, and that's my reason being for that. Now you trade your confirmations here, so you have your distal line and your proximal line. This means that a sell on the daily will be confirmed by the close, being an engulfing or a hammer. It's signifying essentially a bull trap in my eyes, or I'll be looking for a diagonal ending bearish pattern. This is what I look for personally, so hopefully that helps you. And on a weekly, you got to let things smooth out first before you take your long-term positional trade. So I would let it move, react on a daily, then move down, and then you get your move. The signal's already provided, you just got to react to it. So what can we see here is, if I use the purple line, again, a super strong curve, very steep. And it's pretty important here to note that there have been opportunities to cover yourself in hedges, take it back down to smaller fiber retracements and pivot points. So a lot of on the way, you'd draw weeklies here, specifically on this candle. That would be a weekly. And you notice that price pretty much touches the line and respects it. So as the bullish moves keep going up, yeah, it does fake out, but you're not here to make line of best fit. It's a curve. And the same with the tops, right? This is your top, get to be retested. It will always overextend in Nasdaq's case for wick purposes, and will extend back down. So upon here, you've got another weekly candle here. Perfect. Aligns back again, keeps building blocks, keeps going, and that's essentially how the market will work in that structure. Now, when it comes to psychology, a lot of the time it's harder. It's easier said than done, to trade. So you'll hold it for maybe an hour. You'll realize that you're down margin, and yeah, you're losing a heap of cash by the second, and you kind of just think, I chuck it and take the loss, or you'll sell out too early from a buy position, and then you'll just take the profit. That's all that matters, right? Just compounding your account. Just keep a little bit running on a risk-adjusted move, and then let it go. And then when you find a next optimal zone, which is what we're looking for here, as positional traders to hedge next, chuck on another one with confirms. So somewhere here in the daily would have been your confirm. But anyway, back to where we are currently. There is a steep curve which has occurred right here. Excuse me. So that's about there. Now, what's happened yesterday is that, or last week, sorry, rather, is that there's been an engulfing candle. Now, what happens here, as I'm expecting in a bullish PCP move, is that price will take us pull back a little bit, or next week it will just continue up, heading up to this level. And there is a daily / weekly zone here. So this is your first hurdle to pass. And this will be considered the range. So once price taps this in a bullish move, you'll head back down and touch this weekly zone. And then it should more than likely head back up. The supply will be pretty strong but getting weaker. Probability might be in your favor because this PCP zone is still optimal. However, do realize that the monthly and weekly shows strong continuation in bear market, right? So we'll be looking for a downward move hitting around 10k mark for bearish. So you can take your profits nicely. You get a couple of 1,000 points here, odd, and sell away. Just keep the profit in mind and worry about the lot size as opposed to being greedy and chucking it all in. That's the main thing here. So this is your range, and that's exactly what I'm looking for, either on buys or sells. Got to be unbiased, trade what the market gives you, right? So that's all we can do. Let's chuck it down to the 1 day. I also want to keep this here because it might be useful. Let's get rid of the monthly. And then we'll also keep the curve in because it's pretty important for a reference point. And then I also want to keep the monthly as well. Righto. So now that's all said and done, and we've got this chucked in here. Let's take a look at the daily. Righto. So the range on the weekly is perfect. It aligns nicely to this daily block and weekly block. So this consolidated pattern here is exactly what we need. So what I'm expecting personally is, let's just try and draw it out with arrows, is that price will go, oh yeah, nah, yeah, up here, tap, fall out from a reactive sell because this area is so strong in terms of candle wicks and a lot of orders placed here. The market is still bearish in terms of structure, so you want to retest this candle. So I'm looking for the exact maybe tap or a deep retracement tap, maybe heading up towards this zone here, 12.76, before immediately selling out. Now, I could be wrong. Price may overextend, to a bull trap, then consolidate a little bit between here, and then head on up to the PCP level. And if it does, your next zone is here, and then your further zone is here. But these hurdles are super fresh. So what I'm expecting if price does continue to go bullish, is that every reaction zone here will tail off like so. So it will reach it, fall out, back to this, and it will establish a new training range. So keep that in mind too. It's not a strong range here, but that is a nice little support, unquote, zone. It's a resistance zone, but yeah, it's not looking favorable. I'll mark it up with waiting points here and a nice waiting point here, and then subject to price going all the way back to the top. Highly unlikely in my opinion, but who am I? Price could go all the way back up here at some point. But as I said before, the supply is a fresh original supply and it's partied already, so price is more likely to retest this zone and head south. But that's my markup, and that's how I do it. So from here, I'm just going to add in a quick zone as well here. This is your fresh order block here with a retest here. So the level, more than likely, in my eyes, head up, give a nice PCP rally, reactive zone, sell back to here, and then in a bearish move, price could fall back and retest this immediately as a break of structure and also fake out. So keep that in mind. Hope that helps you all out. After this, I'm going to go to sleep. So take it easy. And best of luck in trading. Bye bye.